It's a really sad day for me today. Okay, I went to reach for my bottle of rye when I was making this Manhattan, and I poured it, and then next thing you know, it was like maybe a half an ounce of rye came out, and then
nothing.
Yeah, I mean, as soon as I picked it up, the bottle felt light, so I knew, but I didn't know to that extent.
I was gonna say it's definitely one of those things where it's like, why didn't I just add this to my last drink? What was I thinking?
I know.
Was I really hoping that I could get one more drink out of this before?
I know. So now I'm sitting here with a Manhattan that is like maybe a third rye, but to make up for it, I topped it off with some Irish whiskey.
That's St. Patrickal of you.
Thank you.
I'm sorry. That's St. Practical of you.
I'll take both. Why not both, man?
Okay, no, let's do it. Absolutely.
Did you know that over $5 trillion exchanges hands on a daily basis? That's an average of over $220 billion an hour. Now, how does this much money move every single day, and why does it move the way it does? Here on Drunkenomics, two bartenders who also happen to be students at the University of Nebraska Graduate School of Business are going to sit down and drink to the global economy and try and translate it into English. So sit back, relax, pour yourself a stiff one, and have a drink with us to the comedy that is the global economy.
All right, folks, welcome back to Drunkenomics, the drinking podcast with an economics problem and a speech problem, apparently. This will be coming out to you, I expect, on St. Patrick's Day.
Yes,
and
hopefully.
With that in mind, folks, just remember, the Drunkenomical first round is a shot of Bushmills and a tall boy of Bush Light to honor our bets with each other.
Yes.
Each of us down one. Aaron for the National Championship of College Football.
Yes.
Myself, James Goldwater, really expecting more from the Fed today than they were willing to give.
Well, let's just start by saying this. You're at least the more gracious host still. Okay, so congrats. It's like 15 weeks for you straight.
Thank you, Vix, for this honor. You know, it's going to go away one of these days, and I will return to less gracious hosts like Gollum to a cave somewhere. And it's going to be great.
We'll see what happens.
We will see.
Because I think the big news today for this week, you know, and we mentioned this a lot on social media. I should probably plug that real quick. At Drunkenomical, DRUNKENOMICS. That's us on the Metaverse.
Facebook, Instagram, and then also
that's how you say
on
it. Facebook and Instagram.
Twitter. One of them.
Whatever.
It's the bird.
It's the bird that Donald Trump isn't on. So at Drunkenomical, you can find us on. You can find us there on the tweeters, on the Tweeterverse. Yeah, we've been commenting a lot on the FOMC meeting because it was the breaking or fixing, or more so, let's just say breaking news. The breaking news for today, which is March 16th, Wednesday. That's when we're recording.
Listen to the meeting today, and all I can say is...
Did you actually listen to the meeting?
Yeah.
Oh, good on you, man. Because I was busy, I couldn't listen to it. But
well, I was in the lounge, so I was able to. Excellent. I had CNBC on because you know what? I kind of wish I hadn't had to listen to this. I was hoping when they broke to something live, I was like, oh, good, the FOMC. That seems earlier than I was expecting, but that turns out Biden. And I was like, you know what? Okay, $800 million of new military aid to Ukraine.
Million or billion?
Million, I thought.
Oh, okay. I thought it was billion for some reason, but billion would have been really steep.
Because it brings the total of U.S. military aid to Ukraine to $1 billion. And so that may be where your confusion goes. All I could think at the end was
like... zeros mixed up, so...
Yeah. Your Triceros Club?
Yeah, okay. It's like when you're looking at a balance sheet on Yahoo Finance. It's like all these figures are in thousands, you know? So you see like thousands. So it's like revenue, $5 million, and it's really billion, right? So maybe that's where I got it mixed up. But anyways.
Yeah, no.
So $1 billion is now the aid?
It's the amount of military aid that we're sending there.
Cool.
And so I'm sitting here looking, I'm like, okay, I've read some places that it looks like Germany, Poland, some other countries are looking to buy F-35s. Mm-hmm. I've looked some other places and I've seen that obviously Ukraine is using a ton of Javelin missiles, and apparently they're working. I mean, they're working let's put it this way. I've seen enough video to go like, those things are working like a charm. These things clearly are great tank killers.
They've gone through so many trials that a lot of R&D spending.
Well, yeah, and it clearly works. So I'm sitting here thinking before the Fed meeting, like, obviously, you know, Raytheon, who makes the Javelin missile, Lockheed Martin, who makes the F-35, they're going to be up. Right? Nah. No, the other way on that. But Lockheed's down 6% today. Raytheon's down nearly 2%. And it's one of those things where I'm like, you guys know there's a massive orders are coming. Like, the revenue's not about to go down.
So what you're saying, totally understand. Not going to dispute what you're saying at all, because we all know that the top line is going to go up. More than likely, because of that, their bottom line is going to go up too. And their stock fell. And this is not financial advice.
I get it. All right.
I'm just saying, like, Raytheon is already trading at like almost 40 PE. Lockheed, I think, is a little bit cheaper when it comes to the trading multiple.
Yeah.
So,
but still, it's still enough.
I don't know though. I just don't.
Yeah.
You know,
and I understand it from that looking at that PE perspective. But I still look at it and I'm like,
yeah,
I don't know.
But it makes me think that like maybe it was already priced in. Like maybe this conflict was as it was looming was priced in. I don't know, right? And then I'm seeing this news article. So this just popped up, right? So I'm not trying to like, one up you or anything. I swear to God, this literally just popped up. But
you can.
I'm seeing a news article from Bloomberg and Barron's that says the Pentagon cuts its request for Lockheed's F-35s by 35%. Obviously, a very bearish headline for that company.
Then that makes I get it. Like I don't think the rest of the world is gonna pick up that 35% cut.
Well, when it comes to I would say 35% of the Pentagon's military spending. I mean, 35% of like the U.S. military spending is probably more than most countries.
I'll be honest. Looking at the Russian military right now, I'd love to know where. So apparently they've increased their military spending like a substantial amount in the last decade, and I'd like to know where it went personally.
Right. Yeah. And, because the other thing too is like one of the big things that we saw on top of the FOMC was, and all the stuff with Raytheon and Lockheed is Russian debt. They're going to default for the first time since what?
19? They have to. Yeah. 18. So 104 years.
1918. Right.
Yeah.
So
what else happened around that time?
Wait a minute. Yeah, I don't know.
There's a ruinous war that collapsed the Russian government.
You're thinking of a different year. There's no way that could have been that year.
That's true, because that actually happened in 1917 to them. It was the next year when the communists got.
Yeah, but it makes sense that they defaulted in 1918.
Not the communists, the Soviets, because that's what they were.
Okay. Yeah, but it makes sense that they defaulted in 1918 because that's probably when all the interest was due, or like when the fixed income payments were getting dished out, and they had enough cash probably in 1917 to make it through that year. And then they probably defaulted in 1918.
Also, they deposed the Tsar in October. Yeah. So it's like,
okay. So
we can make it through November and December before it really goes down. Yeah.
No, I agree. But the Russian debt, what was the amount? Like 150 billion U.S. equivalent dollars is what they're going to default on?
Yes. Or is the amount of total debt out there so outstanding? So the payment today was only 117 million.
That's right. That's what it was
to Europe, but it's the first of 4 debt payments this month.
4 in this month of in March?
Yeah, correct. They've got 2 weeks, so they've got 3 more payments. And this is, for me, I look at it, I was kind of like, and then Russia's on top of that. They've said, if you're a friendly, we're going to pay you in yuan, right? So Chinese yuan.
Where do they have? Do they? Because that's right. They have their yuan reserve is massive. That's right.
The yuan reserve is about 14% of that $600 billion they have in reserves is in yuan or yuan denominated securities.
Do they have a lot in other securities too? Because
they have 130 billion in gold, but the rest is all in Western currency and is therefore all frozen, or almost all of it. So much so as to say, like, they've got maybe, I think when I did like some really quick math in my head, I said it was 14% of, they've got maybe like 30 billion in yuan or something, 50 billion in yuan, and then 130 billion. Well, 180 billion, that ain't gonna make it. And cut it.
Well, what I want to know, so like when these state banks, because it's the Russian state banks that they're the ones that are paying interest, not actual.
It's also Russian sovereign debt. So there's Russian sovereign debt, and there's Sberbank, and there's
So
and like Gazprom
when they pay off
so
when they pay off their loans, do they pay it off usually in their own currency, or do they pay it off? Because obviously, like an American bank, they don't want a ruble. Not that
exactly.
I mean, especially now, but like before, they don't want a ruble too.
Yeah, so exactly. That's a great question, and that's why we see like these really cool things. We saw it with Evergrande too. Is that when Evergrande was defaulting on its debt, it wasn't defaulting on Chinese yuan debt. It was defaulting on dollar-denominated bonds. So debt issued in U.S. dollars to U.S. dollars. So this $114 million equivalent is actually in euro-denominated debt. Okay, like Europe is sitting here going, you need to pay us back in fucking euros. And what Russia has said is, if you're a friendly, we're paying you in yuan. And so that's like the 5 countries that are still friends with them. So North Korea, Egypt, Uzbekistan, Venezuela, Belarus. Syria, and whoever else. Belarus.
I know.
Belarus won't commit its military, so maybe they aren't as friendly as they originally thought, or as Putin originally hoped. Maybe didn't hope, but thought. And now
I don't really think Belarus is a force militarily or economically.
Well, to be fair, apparently Russia isn't either. So
I know. Well, economically, we all knew that. Militarily,
Well,
we
economically, certainly. Militarily,
we way
assumed.
overestimated them, I think. But who knows?
Yeah.
I mean, apparently they're going to do the chemical weapons or whatever. I didn't really read that headline.
Well, that's still so chemical. So the entire premise of like chemical nuclear weapons, it's a very dangerous thing because if the wind blows the wrong way, and I'll be honest, the vast majority of the wind blows into Russia from Ukraine.
Yeah,
I've got a great idea.
From the sea,
let's drop a chemical weapon and then blow it back on my own people. Also, let's drop a nuclear weapon and then blow the radiation back on my own people.
I'm
not saying you don't last long doing that, but I am saying that's not the best idea I've ever heard.
I know,
it's up
but
there.
Russia's.
To be fair, a nuclear weapon is up there with the worst ideas I've ever heard.
I understand that, but remember, like Putin isn't very pragmatic. Remember, so sorry.
He's less pragmatic than I'd initially given him credit for. I guess I'll say that.
That is absolutely true. But what I want to do is like back to square one.
So what Russia said is, they're going to pay this debt in rubles, which just to give you an idea of what that sounds like, $100 in debt would require 11,000 rubles.
Yeah. So 2 months ago, it would have only required about 750 to 800, 750 to 850 in rubles, right? About that much.
7,000 to 8,000. It's a pretty.
1,000. Did I say?
Yeah, you said 100, but I know what you meant because you were right. 7 to 800.
Yeah, sorry.
7 to 8,000. Yeah.
Yeah.
Now I'm saying it. Now it's just shy of 11,000. It's actually it's like 10,000. Like 980 or 890 rubles or something for every $100 on 117 million.
Yeah, and it's a currency that probably in the future isn't going to hold its value. So
no,
do you really?
No, it absolutely isn't.
But from the beginning, so like when the Russian state banks, like obviously they got to a point where they accrued all this debt. So how do they get all this debt to begin with?
Bonds.
What was the
current?
current?
Describe that.
Yeah,
bonds.
so they sold bonds. What do they receive when they sold those bonds? Did they receive their own ruble or did they receive?
Yeah, so this is the funny thing about how central banks work. So the funny thing about any given country is that really the only thing accepted in that country for payment is its own unique currency.
So someone at one point exchanged the dollar for the ruble, bought some Russian state bank debt, Russian central bank debt, Russian government debt.
But the reason it was such a good deal for the guy, in theory, the reason it was such a good deal for the guy buying with dollars is that the guy selling him rubles, right? It's a dollar for ruble transaction and then a ruble for bonds transaction. And when you price in that dollar for rubles, the guy buying the dollar so desperately wants the security of the US dollar, he's willing to give you a pretty steep discount because he understands that he can take a loss up front because the next roller coaster ride, he's going to be fine. Whereas you're looking to arbitrage essentially immediately your dollars for bonds, and you get a guy in between going, fine, I'll buy the bonds with my rubles now in exchange for your US dollars now. We'll just do so. It's an arbitrage agreement essentially.
Yeah, and think about it this way: like I know inflation like actually hurts poor people the most because they actually spend their money, so their buying power goes down steeply.
Be honest, most things hurt poor people.
Yeah, exactly. But like if you like for some reason though, like if you look at it from like I don't know what it is. I don't know if it's like finance classes or like me taking the Series 7 or whatever it is, but it seems like every time they mention inflation, they always say inflation hurts lenders the most because when they get their money back, when they get their interest payments back and the principal back, it's got a weaker buying power when they receive their
they're
money
getting
back.
Payback. They're getting paid back a set amount, but it has less buying power than was initially. Perhaps was initially priced in.
Yeah, think about it this way: like if I loan you $1,000 for 30 years, like I want that $1,000 back eventually in a span of 30 years, plus interest, plus inflation. Like I want to make money on that.
I want to have at least as much. Ideally, I mean, for instance,
or not necessarily make money, but like have a bigger. Like I want my buying power to increase.
I don't want less buying power. Exactly. When I get creative control of my money back.
Yeah.
And,
so if you think
not going to happen with the ruble.
Yeah. When you think about international finance in that sense, when you buy like a foreign company's debt and you pay them in that foreign currency, I got to think about this because
I think I know where you're going, and I'm going to do a quick math. I'm going to do a quick sum and just give you an idea.
Okay, no, fair enough. Wow, I took a really big sip there. Sorry about that. I should probably top myself off. But yeah, if you exchange your dollars for the Russian ruble today, it probably means that you think, or at least you're trying to protect yourself against the dollar, the buying power of the dollar going down, and you're protecting yourself with the ruble because you think the ruble is apparently more stable. So that's usually how it goes.
Let me give you an idea.
Yeah, so it's kind of like Forex pay. Yeah, it's kind of like Forex trading.
The coupon payment. So the amount of rubles that are going to be paid to Europe today, in theory, to pay this coupon payment are 12,857,142,857.14 rubles.
That's one
to settle $114 million worth of debt to Europe today alone. So if that's what they paid, and it's easy to print that out. Ask any quantitative easing guy; it's easy to print that out. But for lack of better terms, just to settle this debt, 12.9 billion rubles were printed today.
Wow. So obviously not good for the ruble index if there is one anymore.
And to be fair, there really isn't. It's like I said, it's trading a ruble buys less than a penny.
A lot less now, yeah.
The ruble buys less than a penny, and in the United States, I don't know if you guys noticed, people don't want pennies.
No.
People don't stop to pick them up off the ground.
They don't even want nickels. Or maybe they do now.
People barely want nickels.
Not to be confused with the actual nickel.
Like definitely not. A penny. In the United States, let's be fair, a penny is worth more in terms of its constituent metals than its denominational value. And the penny, not its metal value, but the penny itself is still worth more than the Russian ruble.
Yeah.
You want to see a country undergoing just runaway inflation.
Yeah. So what I want to know is like what's going to happen with all these banks that lent money to Russia.
Well, so the total amount of a debt outstanding is what, 150, 250 billion or $200 billion.
And there's just no way they're going to be able to pay it back because they can't face that exchange risk. So
yeah, they can't do the trade. They're locked out. So here's the great thing: looking at that systemically, it's nothing. It's a drop in the bucket. Yeah, these banks in question, the hedge funds in question, so like BlackRock, which has a huge amount of Russian exposure. Some of these other guys, they're going to take a bath.
BlackRock is actually one of the. I thought they were one of the smarter guys on the block, but I guess
you can be smart, and you can just not be able to unload your position in time.
Oh, gotcha. Because maybe they're just facing some liquidity issues.
Yeah, so BlackRock
they couldn't unload. It's kind of like the movie Margin Call, which is now on Netflix, right?
On Netflix, guys, folks, watch it.
But they couldn't unload those bonds. Yeah.
So BlackRock's expected to face a $17 billion loss on their Russia
exposure. Bonds. Wow.
Well, bonds, other securities. It's not just bonds. It's multiple things because you're locked out of the Russian markets.
Right, but it sounds. Oh yeah, well that too. But it sounds like most of it is bonds. Which remember when we took finance and they said bonds weren't risky.
Yeah. No, U.S. bonds aren't risky, right?
That is true. Okay, portfolio management, very first class. Yes, that's right. Yeah, risk-free asset.
T-bills are theoretically a risk-free asset. I think that's less true historically now than it's ever been. But the Russian bonds are. I'd say now they're not worth the money, the paper they're printed on, just because I know what a sheet of paper costs, and it's definitely more than a ruble.
That is cruel, man.
Look, I said it in the Discord. And if you want to know how to find our Discord, go to any of our social media, the metaverse, anywhere else, Twitter. You'll find the invite there. It's a permanent invite. Join us there. You'll see that, and I'm going to post the video in there when I track it down again. Yeah. And think about it. But there's a video of a Russian trade analyst sitting on Russian state television. They ask him, "Oh, how are the markets doing?" And he pulled a bottle of vodka out, opened it, and did a toast to the death of the Russian market. He did on live television.
I don't know who this guy is,
but he's a hero. He's probably dead. I'm willing to bet he's either dead or he's had a run-in with state security, and it wasn't a pleasant one.
Maybe he's pulling a Jack Ma and just laying low.
This guy, I don't know if they would have given him the option to just lay low.
I agree.
He drank to the demise of the Russian economy, not economy, but the financial markets.
Yeah, and. Like I've seen this at work. I mean, a lot of people are trying to get out of Russian securities. They can't. It's completely frozen. There's no market, buy or sell side.
His name. I don't get this out. He's a financial analyst. His name is Alexander Butmenov, and he said, "Dear stock market, you were close to us. You were interesting. Rest in peace, dear comrade." Wow. And then drank his vodka live on state TV.
I have a lot of respect for this guy. I have a ton of respect for this guy.
To be fair, a guy who's willing to call it how he sees it and just go like, "Yeah, fuck it, it's gone."
Yeah. How do you hate that guy?
You can't. Well, to be fair, I haven't looked to. Well, let me find this. Has the Moscow exchange opened? Because it was closed for a good 10 days.
Yeah, it was closed for a lot of sessions.
It has been closed since February 25th. The exchange just simply hasn't opened.
So it's like 3 weeks almost now.
Can't have a run on your market if the markets don't open.
Yeah. But like the liquidity concerns, that's going to drive the bids and offers. It's got to drive them way down.
Well, the big thing is this. No one's trading on the Moscow. No Europeans are trading on the Moscow Exchange.
No Americans. Nobody that wants to do business. Japanese traders, South Korean traders.
North Koreans might be doing it, but let's be fair, there are no North Koreans doing it. There might be like one North Korean doing it, but he's not doing it. Yeah. The Chinese might be looking to go in and buy Russia for a song and a dance. And I'll be honest, they're not convinced. They're not even going to watch the song or listen to the dance.
Watch the song or listen to the dance.
But
okay, fair enough.
What did I say?
Yeah, you said watch the song and listen to the dance.
You know what? And I'll say stuff like that. I'll say it more. Yeah. That's a new shirt.
Cheers, man.
Don't watch the song or listen to the dance. Yeah. But no, it's over. And here's the big thing. I think the real reason they don't want to open is because before they opened in after hours trading, I think let's be fair, BP, Shell, they liquidated their positions in after hours trading, and because the market's never opened, they don't ever have the trade. It's occurred. Someone owns those shares. Yeah. What they paid for them is a totally different issue, and that becomes reality at open. And so, imagine your market drops by 80% overnight, except 3 weeks, and we all know.
But it's all liquidity concerns, because like if you trade any stock that has liquidity concerns, which, in case you're wondering, how do I know if a stock has liquidity concerns? Look at the volume, right? Just look at the volume of the stocks for that day.
Yeah.
If there's liquidity concerns, the value is going to plummet, right? Because why would you want to pay for a certain stock at 50 times earnings when you're going to have a tough time getting out of it? Unless you see massive growth potential or liquidity in the future. Why would
I buy a company that why would I buy into a company I am not convinced will be a going concern next year?
Or we can do something like, why would you want to buy a horse carriage? Because aside from the whole electric vehicle craze or whatever like that, whatever, shut up. But like, why would you want to buy a horse carriage? Because like when you turn around to sell it, like how many people are actually going to want to buy this thing? Not very many, right? The market for this thing is not very big. So the Russian stock market, that's what's going on with it. There's massive liquidity concerns, obviously, because no one can trade it. And when no one can trade it, there's no liquidity there.
Absolutely. So it's frozen. And then the next problem is the currency that you're using in question, the ruble. Yeah. It wasn't all that strong to begin with.
It really wasn't. And it was declining in value for a long. Yeah, it was declining.
It hasn't gotten better.
It has gotten so much worse, but it was declining in value for a long time, and then overnight, 50%.
I'm going to start doing my poker games in rubles just because I can sit there with I could go with $1 and just be like, my best John Malkovich and Rounders impression.
Oh, nice.
20,000.
Yes, great movie. All in. Oh, and then he just check.
Pay that man his money.
Pay that man. He beat me straight up. Great movie reference.
I'm a baller on a budget. I might go down to Wells Fargo tomorrow with $1 and just go, I want rubles for this.
If you went to Wells Fargo with $1, why would they not want to give you, if they had any rubles, why would they not want to give you rubles? Why would they not want to do that?
I think Wells Fargo would look at it and just be like,
yeah, all right. You're an idiot. You're an idiot, but okay, I will honor your request. Like if you want to be this kind of forex trader, like the old school forex trader,
actually take possession of the currency.
Yeah. Wow, old school. But yeah, anyways, I want to go back to the FOMC thing because I know we kind of briefed, kind of touched on it for a second.
Yeah, today was a wild meeting. Well, it wasn't a wild meeting.
It was a wild meeting, dude. You could definitely classify that as a wild meeting. Maybe not as wild as like Lars Ulrich, but wild. But should we start with the whole Sarah Bloom Raskin thing?
Yeah. Okay.
What a weird turn of events.
Not really. Are we really surprised by that? Like,
yes, I am. Yes.
Are you kidding? Okay. I guess I'm less surprised about her. Well, okay. So Manchin said he wouldn't do it, and that's I was like, well, okay, you need him to assume the Republicans are going to lock and file against, and you need Manchin. So
what I was surprised about was every single Republican was like no to her. Right. That was what I was like, whoa. All of them? I don't know. I don't know that much about her. I know she's very progressive. Not very progressive, but she's pretty.
She said some things about energy policy historically.
That's what rubbed Manchin the wrong way. I don't know if that's what got everybody in the.
Well, the Republicans didn't want her because she's liberal. I think it may be a gross oversimplification, but it is. Let's call a spade a spade.
Yeah, no, that's exactly why. Like she was.
And to be fair,
she's very progressive.
And in the 80s, Manchin founded 2 coal companies that his son currently runs. So yeah, he's got a vested interest in coal not being selling on the outs with the Fed. And so yeah, I could see where like, yeah, you get 51 votes against you, you're out. Maybe you keep certain views.
Yeah, but I felt like she was up for, like, what was it called? Like, because like you get nominated and then they vote you in, which
she was supposed to be vice chair of supervision for Federal Reserve, right?
Right. Yeah, exactly. But she backed out, right? Because she knew that she wasn't going to get what's his name's Manchin support.
She wasn't going to get confirmed, and so what happens in a lot of these cases? This is just political calculus. Is it costs political capital to be up there in the first place. Yeah. And so if it becomes clear that you cannot, that if it's going to be a hard road to till, but you can still get nominated, it may be worth the capital. Mm-hmm. But if there's no way you can win,
right, that makes sense.
Then you drop out, whether it's by your choice or by someone else's. Someone tells you, okay, look, it's not going to happen. Let's reform, try again. And now, I mean, look, I wish that politicians would actually be compelled to hear the arguments, do the questions and answers. I'm tired of like things like the filibuster being like, well, we're going to do the filibuster. And my response to that is, okay, do the filibuster then. Because let's think about what a filibuster really is. A filibuster is to prevent a vote on an issue. My thing is, if you're going to vote no, just vote no. And then if your constituents hate you, they vote you out and you can fuck off. But no, or you go home to your constituents, you tell them, well, this is why I voted no, blah, 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 reasons. And if you bring your constituents around and you get reelected, you can vote no again in the future. Yeah, but when it's hard, when politically the will of the people is that you vote yes, but your will and your will of your donors is that you vote no, and you go, well, if I vote no, I don't get elected again. And if I vote yes, I don't get the money. And I'm sorry I sound like Lindsey Graham right now, but what I'm going to do is I'm going to go ahead and filibuster this vote so we don't have to have it, and I get to keep the money, and I get to tell my people back home, oh, it's the feckless, it's the other side. They're just not bringing good bills to the floor.
Yeah, so that's the reason why. Like, I mean, obviously for political capital, that's the reason why people would vote.
Well, I
mean, I personally think like hardly it's ever like someone ever filibusters something because it's like, oh, it's my personal moral conviction. This is just on the opposite side of my moral compass, and I'm going to filibuster because.
Well, if it's the other side of my moral compass, I'm not going to filibuster. I'm just going to vote no. I'm going to say, bring it to a vote. I'm going to vote no.
And you're going to convince everybody else to vote no, right?
And I'm going to do everything in my power to convince everyone else around me and my constituents that it's a bad thing. Yeah. But when you see people saying like, well, we shouldn't have a vote. Why not? Oh, well, because a vote would force you to put yourself in the firing line between the people that pay you and the people that vote you in. I don't think that's to me. It's not a legitimate option. But that's political capital general, and I think where we've gotten a little distracted.
Yeah, no, I totally understand. But anyways, so it's all
the same thing.
Yeah, but I think for sake of political capital, she withdrew herself. I think she's still going to get. Personally, I think she's going to
go somewhere.
I think
she'll go somewhere.
I personally think she's going to be the comptroller of the currency because, like, they had some psycho. Like, I thought they had some psycho lady that they were thinking about nominating. And I was like, please, for the love of God, not her. I forget her name. Whatever. But I think that's where Sarah Bloom Raskin's going to go. I think that's where her new job is going to be.
I don't know where she's going to go in the administration, but I absolutely believe that she is going to have a place in the administration. Yeah. It's going to be in the administration. She's not going to be at the Fed.
Yeah. Well, like Elizabeth Warren loves her, right? Elizabeth Warren is a huge fan of Sarah Bloom Raskin. So in case you guys are wondering where Bloom Raskin stands.
Yeah. You got some pretty good ideas there.
Yeah. Just from that. Right. So I don't know who's going to possibly replace, like, I don't know who they're going to nominate.
It may be it is also entirely possible in the game of political calculus, or in the game of politics and the political calculus, that she was a red herring. She was the one they put up to gauge who was on board, who wasn't. And then they moved somewhere slightly to the right of her.
Really? So
to get Manchin back on board and to kind of she might have been the plumb bob to gauge the depth. Or the thermometer to gauge the temperature.
Like they threw her out there to kind of see like how polarized the Federal Reserve is politically.
To see how the federal nods are. I'm not saying that's definitely what I think. I'm not saying that's what I think happened.
I think that's a really good. That's a good hypothesis. That's a very good educated guess.
Because when she came up for it, I was like, oh, she'd be a very interesting. What I thought was she'd be a very interesting voice there. How are they going to get her confirmed? Mm-hmm. And it turns out, they can't. And I went, whoa. Oh. They didn't think it through.
Well, I'll say this because, like, remember when we did that episode about her getting, nominated as the replacement for I forget who left. So somebody left, and then eventually, like, they threw her name in the ring, and I was like, I don't think she's gonna have any problem getting nominated. Well, but I also didn't. I had no idea how progressive she was, or apparently is. Right? I don't know.
So this is an interesting thing. So it's I'm looking at the headlines about the withdrawal of her nomination, and there's and what I'm seeing is a lot of things saying like op-ed pieces being like, well, replacing her with someone a little more moderate, but with a focus on banking.
Yeah.
Freeze Biden up to slip in maybe a candidate he really wanted to slip in. And so maybe it looks like maybe she agreed to be the sacrificial lamb for that, with the understanding that she was going to post somewhere else, a different post. So like, hey, I'll go take the beating on this and draw the fire so you can slip in your actual nod. You see it all the time with Supreme Court justices, like when a Supreme Court nomination comes up, is you'll see that the president will like will like put on their public schedule they're meeting with a dozen different judges, and it's like, oh, some of these people have no chance of being elected, but it's, oh, well, if I nominate them and they go before the Senate, it might scare the hell out of the other side to the point where they'll give me the guy I actually want, right? So it's that. Right. I give you.
Maybe she has.
Haggling.
Yeah,
it's all just haggling, and it's just essentially, I want 30,000 for this car. I'll give you 20. We both know that we're gonna meet somewhere in between.
Yeah,
right?
we both know that it's gonna be sold for 26,000, right?
Right. So the Russians the Russians have said there are 500 dead soldiers in Ukraine on their side, and the Ukrainians say 16,000. And we can agree, well, we know a ceiling, we know a floor.
Somewhere in between.
It's probably somewhere in between there. Neither side is. Yeah. Both sides have reasons to. Yeah.
Randy Quarles, that was the guy. Sorry, that was the guy that left the Fed, the vice chair of the Fed. I forget his name. I just now saw it. Randy Quarles, yeah. But anyways, the Fed, they raised, the big headline was.
They raised.
I can't believe it took forever to talk about.
Let me rephrase this. They raised rates. They didn't do it.
They've raised rates just enough for me to win a Bushmills. So, but not too much where I would be the one forking out a Bushmills.
No, they didn't even have to raise rates for you to get the Bushmills. They didn't raise rates enough for me to get a Bushmills. Yeah. So they didn't raise rates enough for you to have to buy a Bushmills. It's very different. Aaron, can I ask you? It's not my fault, man. Can I ask you the question?
Sure, please.
Do you think that a 25 basis point rate raise affects inflation?
No.
Okay.
But what I think it does, I think what it does affect is interest expense in the next, or I guess, it would have to be on new loans, but it would affect interest expense, and I think it would affect it in the tune of about $800 million. And
on any interest rate that was not any non-fixed interest expense. So like
the adjustable rates, like if they kick in
the
after
adjustable
this,
rates are now
after this, right?
Are now affected, obviously.
So that's what I'm saying. It's like I think it would affect. I saw it somewhere. It was like around the tune of about 800 million or billion. Gosh, oh my God,
it's one or the other.
800 million or billion to 1 or 2 billion or trillion. That was terribly explained, but you know what I mean, right? It's either 0.8 billion
0.8 to 1.2 or
0.8 to 1.2 billion or trillion, right? So I forget what it was, but I'm pretty sure it's billion because it's interest expense for this for the rest of this year.
Yeah, trillion seems high.
Trillion seems very high. So I'm guessing it's the billion, 0.8 to 1.2 billion.
I would agree, just based on the topic.
With the adjustable rates kicking in, and so the 25, that's how much 25 basis points could affect it. So if they raised it by 50 basis points, which is twice that, right? So it could be
that's 1.6 to 2.4.
Right, there you go. See, that's what I mean.
Well, but here's the thing.
I know you're all about ripping the Band-Aid off.
Well, no.
But where's the thing?
The Fed is unemployment is in a very good position.
The economy is strong.
The economy is strong. So unemployment is not the issue. Mm-hmm. So if we're not going to have if we're not worrying about monetary policy affecting unemployment, then we need to worry about monetary policy affecting inflation. And inflation, I hate to say it, they're not going to act fast enough. Some of this is going to become permanent.
I know, but
I saw him say, he doesn't see the wage inflation spiral. My response to that is, get the fuck out of here. Get out of here.
That's stupid.
Get out of here, pal. I sit here and I look at any negotiation, any pay negotiation of salary I go into in a point where I know I'm in a position of power, I'm going to say, I need a cost of living adjustment that pegs to inflation at least.
I know, but
if you're not willing to meet that, I'm not willing to come here or accept that I'm going to jump ship in 6 to 8 months.
Okay, what was the target interest rate in 2023? I think it was 4.3% or something like the 4.25 to 4.5.
Targeted inflation. They were saying targeted inflation was average of 4%.
I thought that was the target interest rate by 2023 was that.
Well, they've said that they're doing a quarter now, and they see 6 more by the end of the year. So that's 1.75 by December.
Oh, sorry. No, yeah, you're right. I misquoted that. So the Fed now sees year-end inflation at 4.3%.
Yeah,
which I'm like, what are you looking?
How?
So if the Fed is saying we're seeing that,
how are you going to raise interest rates 1.75 and expect inflation to be down?
No,
3?
I get it. Like, so the Fed is saying that they see at a 4.3%. I'm like, what are you looking at? Right?
I know DC has decriminalized marijuana, but guys, are you high?
Well,
what are you?
Well, you know what? Acid is still.
I understand it's more if Sarah Raskin was in there offering out some drugs, but no, it doesn't make sense. You can't expect inflation to decrease by more than you increase interest if you intend to increase interest rates slowly and incrementally.
Yeah, so if they raise it 6 more times, and if they raise it in an increment, right, in the same increments.
It's a maximum of 1.75
yes.
at the end of the year.
Yeah, exactly.
So you're going to raise interest rates less than 2% and expect a 3% decrease in inflation.
3 and change. I mean, let's just say this. It's almost like you're basically going to try and cut inflation in half.
Yeah.
Almost, right? Because it's at about 8% right now.
Yeah.
Just shy of 8%. So you're almost going to cut it in half by raising interest rates by
less than half of the amount that you expect to cut inflation by.
But I also
I don't see it.
Yeah,
I don't see it.
But I also don't think it's 100% the job of the Fed to control inflation, because I think there's so many other economic factors that are the reason why inflation is the way it is.
Oh yeah.
Like, first of all, I don't think it's all Russia.
No, absolutely. I'll be honest. Do you want to know how much I attribute to the war in Ukraine?
Yeah, what percentage-wise? How much?
1/10 of 1.
1/10 of 1%.
1/10
so
of 1%.
10 basis points.
Yep,
wow.
that's it.
To Russia.
Yeah.
Okay, no, I 100% agree with you, because that economy does not matter. Like, to me, the Russian economy is so. What shocks me is how small Russia's economy is. Like that's what people don't realize. And palladium. Okay, yeah, I get it. They produce a lot of palladium.
We buy raw materials from them for raw material prices. Now those prices go up when futures traders think, I might have to pay more for this next month. And so they say, I'm willing to pay more for this. Yeah, I'm willing to buy it next month now for more money.
Yeah,
and then the people selling to you now and go, oh, well, we're going to bill you now for the amount we may have to pay next month. And
but we still, the futures markets will do what they do, right? Because they have their implied volatility factors and all that kind of stuff, right? There's backwardation in contango, which we talked a little bit about last week.
I would say, and to be fair, I think that if you're going to be trading in commodities in a meaningful way, and I don't mean like farm commodities, but if you start to affect legitimate markets in a way that like prices are higher than they should be for no reason, and there's backlogs of supply or stock, or people are just running it up because they can, but their intention is never to take possession. I think really to trade in a lot of these futures, you should have intention of taking possession of the commodity.
Well, but the thing is, like the futures,
the futures, representative for someone that does.
Yeah, but a lot of times the futures, because like if you look at oil futures, right?
Yeah,
a lot of these oil companies, they're blaming corporate greed for why gas prices are going up.
They're not wrong in many parts of it, but not entirely. That's not the only thing.
Sure, I understand that, but what I'm saying is like these oil companies, they're only charging the spot price. Obviously, like now that oil futures have come down, now that the oil spot prices come down, they're taking their time lowering the price, which I'm like, okay, that's a little bit sketchy.
So that's easier. So the issue for me is when it becomes sticky like that. It's when they go, the futures price is up, we're going to charge more immediately.
Yeah,
and then when the price comes down, they go, well.
I hear you, because they're waiting for the demand to.
Boy, we're happy to jack the price up, but we're less willing to reduce the price. And so but if you're going to do this, you have to accept that we're going to call you out and call you assholes.
Right, but what I'm saying is,
you live with that.
Yeah, but I'm saying like even as futures went up, like it still took a little bit. It still took like a week for gas prices to actually catch up with the spot price of oil.
Yeah, but to be fair, that's gas that they're selling me now made from oil that they paid that they're $40 to $50 less for. And so it's like, hey guys, I can't help but notice that the gasoline I'm currently consuming certainly did not cost anywhere near the oil used that you consume to produce it. But I think that's nowhere near the amount of that you're currently telling me it did.
I know, but I think what's going on is like the economists that work at these oil companies, like that work at the Chevrons and the Exxons and all those places. The economists are like, okay, we haven't met equilibrium yet, so let's give it some more time until the demand equilibrium matches with the supply equilibrium. I don't even know if I'm talking out of my ass right now.
The equilibrium is when they meet, and so it's when the demand schedule and supply schedule meet.
Yeah, so I think the economists there are saying like, let's wait till they meet at equilibrium. But I also think that these economists are being paid by these companies handsomely to
they have a vested interest in creating revenue.
Exactly. So I understand that aspect of it too, but I think maybe they're just, maybe the companies, the board members just turn around to everybody going like, hey, look, oil prices haven't come down yet, but that's just because we're listening to our esteemed economist here who's telling us this. Maybe that's it. I don't know. This is all just a guess from my very uneducated head.
I guess
but
all
it's
I'm
an
saying is,
uneducated
all
guess.
I'm saying is that the futures prices that people are talking about being around $100 are for April, which means that people are willing to pay that much for a barrel of oil in April. So in 30 days, they're willing to buy oil for $150. So the fact that they're turning around telling you now, hey, I'm going to bill you as if the oil you're currently consuming, I paid $150 for. My response to that is, well, what did you pay for it? And they're like, oh, 74. Well, hang on. Why are you billing me as it's 114?
Yeah, but
well, because the next time it's going to 100. Bill me then.
But maybe this is a natural aspect of backwardation. I have no idea, right? I'm literally spitballing, but it's cool to see. I'm just saying it's cool to see. Like, I personally love seeing oil back under $100. Yeah, because all these Bank of America, Goldman, Chase analysts, they were saying like, oh, it's going to go to $200. And I'm like, dude, that would be mayhem, I think. But that's inflation, right? Oil is inflation. Commodities are lumber, nickel, all that's inflation.
Yeah. I mean, let's put it this way. What was it? Metal Exchange finally restarted their nickel trading. What was it?
Yeah, which, I mean, nickel looked like a shitcoin. It really did. Like, it was
it doubled in a week. Was it? Or doubled in 2 days?
Yeah, it was kind of like the VIX. Like, remember when the VIX? I don't know if it was a glitch or whatever it was, but the VIX spiked overnight. Remember that? That was like 2 days ago.
Yeah.
And the VXX halted from just Barclays. I think just Barclays halted VIX tradings because I think they were market making, and then they ended up going short, and they had to delta neutral themselves out or whatever it was. But bottom line is, inflation, I think, is just price of food, price of all,
price of food, price of energy, price of any raw material. Yeah,
like supply chain concerns are always going to be.
No, there's a legitimate shortage of supply in a lot of cases. Now, in other cases, I would say they're not legitimate. So, like in the United States, food, there's no shortage there. There's no shortage of meat.
I know. I understand there's no shortage, but it's not the shortage too. It's also the transportation, the cost of transportation.
Well, and I'm willing to accept a certain extent of that. But the problem is, when the meat packers turn to me and they say, well, we're posting record profits. It's like, oh, you're selling more meat? No. Well, you must have raised prices then. Because they did.
Yeah, but at the same time, they also their labor force is cut in half too, which, their wages expense has gone down quite a bit. But I understand.
I was going to say their expenses aren't down. It's just that their profits are up because they raise prices. And so it's one of those things where it's their input costs, their production costs. They're not down. They're just charging more money. And look, again, that's fine. You can do that. Now, when you're a very small group, it becomes a cartel, and there's questions of whether or not this is anti-capitalistic and whether this is monopolistic behavior. So, and I think, and we have the Department of Justice to tell them, oh, hey, so about these fines, the fact that you can't do this, it's still a different thing. What I'm saying is, these companies don't get to then turn around and go like, I can't believe people are accusing us of being greedy, and it's not that. It's this. It's like, well, it's not those things. You are just being greedy. It's like, no, just admit it. If Tyson was willing to turn around and just be like, I
understand you, but this is the thing. I'm not trying to take the side of Tyson or because
neither am I. I don't think you are. I'm just saying, like,
I know, but I just like taking the opposite side of you when we record because one, I'm drinking, and two, I just think it makes
more fun for everyone.
Yeah, it makes it a little bit more interesting. Why not? But mainly because I'm drinking. So, and I've become a smart ass when I drink. So,
better than a dumbass, which I'm not entirely convinced I wasn't for the last 2 weeks.
Or that I wasn't for the last 2 years. Okay.
Hey.
But, anyways, so what I'm trying to say is, I don't know. Maybe, I don't know if they're ramping up their, whatever their price is that they're charging to their consumers. Maybe they're ramping all that up. Because Tyson's consumers aren't people. Like, their consumers are grocery stores. So, maybe they're...
And then in the end, us.
Yeah, so it trickles down to us.
Yeah.
Right? So, they're ramping their costs up somewhere along the supply chain.
Well, it's more expensive at the grocery store, so they've raised their prices. It's more expensive from the meat packers, so they've raised their prices.
Bottom line is their revenues have
ranchers and farmers are receiving the same amount of money. Well, they haven't raised their prices.
Yeah.
Right? So it's boom.
Yeah, exactly. Yeah. So bottom line is their profits went up. Grocery store profits
Remains to be seen.
Some, I mean, like if you look at like a lot of the publicly traded grocery store companies, a lot of those their profits have gone up like crazy too. So
restaurants
so,
weren't, so people were cooking. So that's the thing.
So there's that too. But maybe Tyson, I don't know, like maybe they're gearing up because they're thinking that they're going to be facing some federal regulation, fines, all that kind of stuff, right? So
I like that.
Maybe,
that's a good preview.
Maybe they are. I don't know. I'm not trying to accuse anybody of anything, right? Because one thing is, I want Tyson to keep making food and making it cheap.
I don't want them to make it cheaply. I want them to make it inexpensively.
That's what I'm
cheap
saying.
has an implication of quality. Inexpensive is just the price isn't high.
Okay, so Bushmills isn't cheap. Bushmills is inexpensive. It's a great whiskey.
Jameson
it's inexpensive. And it's not cheap.
That's the problem is it's cheap, but it's not inexpensive.
Yeah. So one more question I got for you, okay?
Sweet, because I've got an answer.
So do you really think that if the Federal Reserve, if this was a 50 basis point rate hike, let's just say by some miracle that at the end of the year, interest rates were at 3.5%, do you really think that would decrease the cost of all this stuff, of oil, of lumber, of...
No.
Okay.
It would do more to arrest the rise in prices. Now, speaking of rise in prices, I think we all owe Berkshire Hathaway a round of applause for closing over $500,000 for Class A for the first time ever.
Congrats.
There you go, Berkshire Hathaway. Oracle of Omaha does it.
Congratulations.
I'd say does it again, but we'll do that next week when he
Warren
does
Buffett,
it again.
Please know who we are. That'd be so awesome. That would make my life. If Warren Buffett knew who
Charlie Munger, if you knew who we were.
Charlie Munger, even
that'd
better.
be pretty cool
even
too.
Better.
You could even call us a bullshit podcast, and I'd be like,
let's do it. 100%. I would be so happy if he did that. Not even like if he knows who my name. Like I don't even care if he knows my name.
Absolutely not. No.
100%.
Hashtag bullshit podcast.
Yes.
Hashtag
100%. Yes.
Not that he has Twitter.
Yeah, I know. Seriously,
we do. At Drunkenomical on Twitter, Facebook, and Instagram, as we said earlier, and then
talk about our merch. Oh my god, man, so many black hoodies, dude. So many dark black and even darker black hoodies.
We also have light black and gray
and red,
and also other color hoodies because I have a blue hoodie.
Yeah, well, I mean, is that drunkenomics.myspreadshirt.com? Yeah, that's our
classy.
Yeah, I know, it's very classy. I mean, Charlie Munger would like it. I mean, he
would look great on CNBC and on Drunkenomics hoodie. Let's just put that
way. My god, man! Like with Becky Quick interview,
In other news, there is a new Drunkenomics dog, a new Drunkenomics puppy. Her name is Cora.
It showed up. Did it show up?
Beautiful. She's here. She's scared of basically everything that moves except Erica, and we're working on that. Me. But soon, she's scared of me. So who knows? She's scared of tall guys.
Well, I'm not tall, so that's
So maybe you're safe. But,
I think I'm safe.
So soon, to be soon, we will have 2 border collies in awesome Drunkenomics merch. So you two could dress up your dog. Same website, same Drunkenomics merch, and you two could have a good-looking dog, just like Flynn, and as soon to be, just like Cora.
Beautiful. And then from there, you can find us on Patreon, patreon.com/Drunkenomics, DRUNKENOMICS.
There we go.
Listen, man. See this Bushmills?
I was gonna say that's my move.
This used to be full.
That's my move, is to get like halfway there and be like, I did it wrong, and you hadn't did it wrong.
I know, but see this Bushmills? This used to be full, right? That's about a half empty, and this is a liter bottle. So that's how much I've had since we've started, and since the 2 shots before the mic was hot. Thank you. So find us there. Make sure that I keep slugging the Bushmills.
Yeah, because you guys remember last week or 2 weeks ago when Aaron ran out of liquor, and then there was the other day when I ran out of ice. That's unrelated to most things, but I did run out of ice, and we've always said if you want to help keep the liquors happen stop and the ice frozen, please contribute to us there. If you don't want to contribute to somewhere else, and we'd really appreciate that. And we love you guys.
Yeah, exactly. So, from there, I just want to say, continue to play chestnut checkers. Remember to fill and kill. Don't brag, just say. I don't know how many other lines we have. We have so many other lines.
I think I've just got 2. Have a Drunkenomical. Well, now I'm going to combine them into one. Have a Drunkenomical St. Patrick's Day, folks.
My man, dude. Cheers. What a guy.
Cheers.